All right. Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we are going to be going over our live rates, and then we're going to do a deep dive into low and no ratio DSCR loans, our favorite topic here today. Definitely exciting. Give us just a moment here to go live on all the different platforms. I see some comments already coming in. Feel free to drop your comments there in the chat, and you can drop questions in the chat too as we go through here. Definitely excited about today. It is our favorite loan type here and some cool twists on our favorite loan type. So it looks like we are live on all the platforms, so we'll go ahead and get started. We'll take the chat off the screen, but go ahead and keep dropping comments there. And you can also drop any questions you have in the chat as well. We will go ahead and get it started. All right. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday on the show at 11 a.m. Eastern is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. Today's loan type is our favorite loan type, which is DSCR loans. And Jose is going to give us some cool low and no ratio options, which are absolutely mind-blowing. So before we do that, though, we will go through our rates. So, Nick, if you're ready, let's go ahead and pull up today's rates and let's see what the market is looking like this morning.
All right. So we will compare all our programs here for today. It is October 8th, just after 11 a.m. Eastern. Not so great news for rates, but we're still at one-year lows, remember. We will set up a basic scenario and compare the APR across the programs. If you'd like a full itemized loan estimate that itemizes all the fees that go into the APR, please get with our team. They'd be happy to send that over. For the demo today, as we do every day, we'll set up a basic scenario, a single-family home, $500,000 purchase, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. We use an estimated 760 FICO credit score and an estimated 40% debt-to-income ratio. So with those settings, let's make the rates nice and big here. All right, first up is our 30-year fixed conventional for a primary home, typically the most common option people think of when they think of a mortgage. Rates as low as 6.124 today, final APR 6.439. And if for any reason our customer doesn't qualify for a standard conventional, we typically want to quote an FHA to compare. FHA allows more leniency on credit issues and a higher overall debt-to-income ratio, but does require upfront and yearly mortgage insurance. Rates for FHA today, 5.25, final APR 6.193 with all of the fees and mortgage insurance included. So if our customer qualifies for both, they may consider FHA if they want to do the mortgage insurance. For customers that need to use it, definitely a good option. And our VA options are only for our eligible vets and active service members. These are great programs if you're eligible. Rates as low as 5.5, final APR 5.798, standard funding fee. So if our customer qualifies for VA, definitely going to be a better option than FHA or conventional. So a great option for our eligible borrowers. And the final option that every banker lender has, USDA, for those properties in USDA eligible areas, those rural areas of the country. USDA comes in today at 5.25, final APR 5.996. So if our customer and the property qualifies, and they're going to compare against an FHA, USDA is going to be a touch cheaper and a touch cheaper than conventional as well. So a good option for those rural properties. And that rounds out the standard options every banker lender has. If our customer doesn't qualify, many banks would have to deny them. But we have 5,000 other options, starting with our non-QM alt doc for a primary home. So if our borrower doesn't quite qualify using tax returns and standard documentation for conventional FHA, etc., we need to switch to alternative docs such as bank statements, 1099s, P&Ls, all kinds of different options that we have. We can do that here for almost identical cost today. Absolutely amazing. 6.125 rate and a final APR of 6.450, almost identical to conventional, which is pretty amazing for our customers to switch to alt docs for relatively the same price. And we have our investment option for alt docs as well, and tons of other investment options. Bank statement or similar comes in today, 6.875, final APR 7.222. And we'll compare that to our conventional and other investment options. So we do have conventional. We do not have government, so no VA, FHA, or USDA. But the conventional programs do allow investment properties, rates as low as 6.75, final APR 7.083. A little better than the alt doc option, but not better than our favorite options, our DSCR programs. Smoking conventional again. DSCR stands for debt service coverage ratio. No income information needed, no employment information needed from our borrowers. We simply use estimated rents from the appraisal to determine a DSCR value. If the estimated rents can cover the estimated expenses, okay, the property will cash flow. That's a ratio of 1 or higher, which is preferred. And with a 3-year prepayment penalty, our DSCR program comes in 6.375, final APR 6.682, beating conventional, amazing. And we can even sweeten the deal with a 5-year prepayment penalty. It drops it a little bit, 6.25 rate, final APR 6.553. And we do have a no prepayment penalty option since some states don't allow it and some investors prefer not to have one. Rates today 6.875, final APR 7.222. So that's a touch higher than conventional. I'd still say 100% of investors would prefer a DSCR option. So if they prefer no prepay, this is the option, or you can add a prepayment and sweeten the deal quite a bit. And the final 2 demos we always do are 30-year fixed second mortgages to allow our customers to access their equity without touching their first mortgage. So many customers have a first mortgage that has lower rates than what we can offer now and need some cash out. So we can do that with either a HELOC or a fixed rate second mortgage, which is the new option here. Fixed rate second mortgage for a primary coming in at 8.125, lower rates than a HELOC and obviously fixed rates as opposed to variable. Final APR 8.542. And the same option to get cash out of an investment property using a second mortgage. Rates as low as 9.375, definitely lower than a HELOC, and HELOCs are very rare for investment properties. And final APR 9.731. So those are our live demos we do every day, but let's get into our special topic today. Something we don't get to do on the live pricer. It is a little bit rare to have a low or no ratio for a DSCR loan. So Jose is going to go into the specific examples for that. This would be where a property, as I mentioned, typically the options we quote on the live pricers are properties that cash flow above 1 ratio, which is preferred. So all the programmers will pop up. Jose is going to go over the rare times where the property doesn't cash flow and it's an under 1 ratio, doesn't quite cover the expenses, and we can still do the loan, but there are caveats here. So Jose, let's explain what we're talking about and then check out some live rates.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Yes, the low ratio, and especially, like we like to call it, the no ratio. I mean, you can call it what you want. We call the low ratio the one that's 0.75 to 0.99 DSCR, and the no ratio the one that is less than 0.75. And any way you look at it, products, when you tell the investor, yes, we can close that loan, just like I told one of my investors the other day, cashing out his free and clear property, putting $210,000 in his pocket on a property that is currently at about a 0.76 DSCR at that loan amount, which is amazing. Customer is so happy. Didn't think it was going to be possible because his rent is a little low compared to what he wants to get. But that is the beauty of the low and no ratio option, right? This is one that we use all the time also for our short-term rental properties when we don't have short-term rental comps for whatever reason. AirDNA doesn't have any suitable comps. We can always go up to a 75% on the purchase of the low ratio. So let's get right into the options here. Very exciting because most people don't know this exists. Especially some of the extra special options I'm going to share with you now. So our first option here is for the low ratio, 0.75 to 0.99 debt service coverage ratio. Remember, we are dividing the housing expense into the gross rent from the property. In this case, it doesn't cover on a one-to-one basis. Maximum LTV on this product is 75%. So we are looking at 25% minimum down payment. And look at those rates. This is not a typo. This is for a low ratio where we are at 7.49 at par. And we can buy that down all the way to 6.25, previously unheard of numbers for this low ratio product that in the not too far off past was approaching 10% on the rates, and now we're 7.49 at par. So now for our no ratio option, this is where the debt service coverage ratio is less than 0.75. Our maximum LTV on this option is 70%, so minimum down payment is 30%. This one theoretically can have a debt service coverage ratio of 0, 8.874%, lowest cost option at par. And you can buy that down all the way to 7.374 at a cost of 3.225 points. And now I did mention to you I was going to have some extra special treats for you. I bet you didn't know that even at a 70% LTV, we could go down to a 640 minimum credit score, still attain 70% LTV, and still be between 9 DSCR. And on top of that, great rates to boot, right? 8.75 is our lowest cost option at par. And you can buy that down all the way to 7.25% for our no ratio. Actually, no, excuse me, low, not no, low ratio, 0.75 to 0.99 DSCR at 70% LTV, which is great. So now for some cash out options. Yes, believe it or not, they even let us do cash out refis with these low and no ratio options. Our low ratio option here, 0.75 to 0.99 cash out, is maximum 70% LTV, and 7.625 is our lowest cost option at par. And you can buy that down all the way to 6.375%. Again, that is amazing. And now for our no ratio. Remember, this is the one less than 0.75. So theoretically, you could have a DSCR of 0.1 and still qualify for this program. 8.875% is our lowest cost option at par, 0 points. And you can buy that down all the way to 7.875 at a cost of 3.225 points for our maximum 70% LTV, less than 0.75 no ratio DSCR cash out. And our last option here, again, the low credit score option, minimum credit score of 640 for this option. This is our low ratio, 0.75 to 0.99 DSCR cash out, with a minimum 640 credit score, can still attain 65% LTV. And I'm sure this is music to some ears out there that I'm sure we will be getting reached out to. 8.999, actually, with a lender credit of 0.025 points. And you can buy that down all the way to 7.499 for a cost of 3.475 points. So some amazing low and no ratio options here. Remember, these are also great alternatives for your short-term rental properties when you don't have any type of short-term rental comps. So do look to the mortgage calculator for all your low, no ratio DSCR codes.
All right. Thank you, Jose. I don't see any questions coming in here, but definitely amazing programs. You're telling me I can have a property that doesn't cash flow and doesn't only makes half the rent to cover the expenses, and I can still get a loan for it, Jose?
Absolutely. As the equity and your credit meets the minimum credit requirements, you're good to go.
And it's a loan that's based on the cash flow of the property, and the property is not cash flowing, right? No employment, no income verification.
Well, at that time, I guess they're banking on your credit as well, and the equity. The LTV obviously is a little bit lower, so they're feeling positive about that. But yes, a program based on the cash flow of the property that'll give you the loan without any cash flow. That is pretty cool.
Mind blowing. Okay, cool. Well, I don't see any questions, so we'll go ahead and wrap it up. Remember that we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a different loan type. So we'll have some cool new loan types for you to go over tomorrow. Thank